What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. After about 3 years, federal student loan payments are going to resume on October 1st. So, what does that mean for the housing market? What does that mean for you as a home buyer or a home seller in this housing market? I'm going to answer those questions, and let's get right into some of these articles here. So, first article, housing market is about to get a lot more expensive for millennials and Gen Z. And I do think this is the case. It is going to get more expensive, but something I wanted to note right off the bat is anyone who has tried to get a mortgage, at least the loan officers that I've spoken with, giving loans to people who have student loan debt, they've had to take into account what their payment will be when the payment eventually does resume. They weren't just calculating their debt to income ratio without factoring into this payment. So a lot of lenders that I spoke with did a 1% of the overall loan. So if you had $100,000 in student loan debt, they would have to take $1,000 a month into your debt to income ratio in order to qualify you for that loan. So a lot of people who recently got a mortgage have already been factoring this student loan into effect, even if they haven't been paying it for the past 3 years. So at least that's been my experience. If you had a different experience, leave it in the comment. I would love to know your situation. So going over the story, recent Moody's report found roughly 5 million borrowers will resume paying about $275 per month. Now, obviously that's significant, especially with consumer loans on the rise. But it's about a tenth of what the median mortgage payment is right now, right? The median mortgage payment is at around $2,700 a month. We're talking about $275 a month. So we're still well under that number. And they have this great chart. I'll leave this article in the description for you folks. So if you want to read through the whole thing, feel free to go ahead and do so. But we have here student loan as a share of the total debt. Student loans, excuse me, as a share of the total debt. So when we look at this, 18 through 29-year-olds, about 30% of all the debt that 18 and 29-year-olds have are student loan debt. And then that number significantly drops off as you get older and older. So what they're saying is this is significantly going to affect the younger population, the people that have more student loans, and the people who are struggling most right now in the overall economy. So how is this going to affect the housing market? Will we see more foreclosures? What's this going to do to the prospective buyer pool? In my opinion, I think people who are searching for a home right now and are going to be pushed out of the market by an extra $275 monthly payment, while that is significant, I think that most of those people are probably struggling to get a home as it is. That if their lender, for whatever reason, wasn't taking into account this $275, if this is going to push them over the edge, push their DTI over the edge, my guess is they probably weren't qualifying for the median home price, or were probably well under the median home value. And I think most people who are in the market looking right now are well qualified, at least from my experience, because it's so expensive to purchase a home right now, and there's still a decent amount of competition that in order to get a pre-approval letter or in order to make competitive offers in the market, you need to have a good amount of money to throw around, to throw at your house. And so at least from my experience, it doesn't seem like a lot of these active buyers that are in the market right now actively looking are going to be affected immediately by student loans being resumed on October 1st. But what I will say is I think it will make it harder for people who want to buy a home going into the future. Having that student loan payment and not being able to put that money away towards a down payment or towards the appraisal gap means you're going to have less money to put towards your home, and is going to put you at a further disadvantage from all the people who have built up equity in their properties and who have more money than you to put towards a home, especially in this competitive low inventory environment. Let's move on to a couple different things here. So I'm going to leave a couple articles in the description. There's this other one here by Yahoo, which essentially says the same thing. I think the biggest way that this is going to affect the housing market isn't necessarily on the buy side. I think if it's going to affect anybody, it'll affect homeowners more than anyone else. And so I think foreclosures here, right? We take a look at the foreclosure data, and I went over this in a video previously that talked about how foreclosures were on the rise. But we we take a look at the foreclosure numbers. So if we were to see an uptick in foreclosures as a result of student loan repayments starting, um, as bad as it is to say, it would bring us more in line with healthier numbers. At least that's that's what I think. Now we could see things start to spiral out of hand. If you remember in one of my last videos, I talk about this press release from the Department of Treasury that talks about how they it says right here, new Treasury Department data shows homeowner assistance fund helped more than 300,000 families keep more than 300,000 families in their home. And in the video that I went over, there was about, I think, 200 or 300,000 additional families that applied for this fund and didn't qualify and potentially are in that foreclosure process as we speak. So, these foreclosure numbers could start to increase as we are in the back half of 2023 here. That will be interesting to watch, especially as student loan payments start to come into effect. Now, consumer loans. This is what I think is some of the most important information to think about when we're contemplating student loans coming back into effect is what are people paying on their other debts. So this is credit cards and other revolving plans. So we've talked about this in other videos. People are really stressed out. The average American is really stressing themselves to afford to buy things like groceries and pay for their average living expenses, and they're racking up revolving debt, credit card debt, and other revolving loans. So to add that extra $200 monthly payment into their budget is going to be tough for people, which is why we could see foreclosures rise. Now, I think this is housing inventory here from the Fred's data. Housing inventory nationally, according to the St. Louis Fed, is about half of what it was in 2016. So inventory has a long way to go before we get back to stable levels. And maybe if these student loan repayments come into place, and with the added burden of people's credit cards payments, maybe that will cause people to stop being able to make payments on their debt obligations, including their mortgage, including their student loan payments and their credit card payments, which could spill over into the overall economy, and potentially we could see foreclosures rise. So how does this affect you as a home buyer or a home seller? It's going to be a long time before we see foreclosures bring inventory to the market in a significant way, if that even does happen. This is not something that takes place overnight. Foreclosures take sometimes years to take place. So, this is something that could affect the housing market a few years down the road. Short term, I think, I don't really think it's going to affect demand that much, because lenders have taken into account student loans into their debt to income ratios when they've made their pre-approval letters, when they've given their pre-approval letters. So as a home buyer or a home seller, I personally think that this student loan repayment isn't going to affect anything in the near term, isn't going to change the market drastically in the near term. Now, in the long term, we will have to see. We'll have to see how everything plans out, see if people can continue to pay their debt obligations, and see if that brings more inventory to the market. So anyway, I hope you guys enjoyed this video. I hope you got something out of it. All my contact information is in the description. If you're looking to buy or sell a home anywhere across the country, reach out to me directly. Otherwise, leave me a comment. I'd love to know what you guys think. I'll see you guys in the next video.